Did you know that you can actually pay 0% in capital gains taxes while making a six-figure income? I'm going to give you two parts to this video. The first part is how to pay 0% in capital gains taxes when you're still actively employed making six figures of income. And the second part is how to pay almost nothing in taxes while you're in early retirement. If you're brand new to my channel, my name is Sai and welcome. My channel is all about how to achieve financial independence and retire early. I'm 36 years old and I've been on my fat fire journey for the last 6 years. And I went from $110,000 in consumer debt to managing over 7 figures in total assets. And ever since I paid off my stupid debt in 2016, I have been consistently saving over 65% of my gross income. And time is an investor's greatest asset, while your knowledge is the ultimate weapon to drive your success. So the first thing you need to know is how the 2023 capital gains tax rates are structured. Almost every person I met in the FIRE community understands how they're going to be taxed during their early retirement. So having an effective withdrawal strategy could save you a lot of money in taxes. Now, I want you to keep in mind that this is not any form of financial or tax advice. And I don't know your financial situation, so this video is just to give you general information and how I'm going to save taxes during my early retirement. In 2023, the 0% capital gains tax rate is from $0 to $89,250 if you're filing your taxes jointly, and the 15% capital gains tax rate is from $89,251 to $553,850. Keep in mind that this is taxed on the profit you made from an asset that you held for at least a year. Let me give you an example. If you bought a stock in 2022 for $50,000 and then you sell your stock a year later in 2023 for, let's say, $100,000, then the $50,000 profit you made will be taxed in the 0% tax rate because it's between $0 and $89,250, right? But this is also assuming that you don't have any other income. I'll give you some examples with other incomes, so stay tuned for that. But I want to make sure you understand how the IRS taxes you and your long-term capital gains. They only tax your profit, not your principal. And you also have to hold an asset for at least 1 year to be qualified for the 0% capital gains tax rate. Easy peasy, right? It's not just stocks that you can be taxed in the capital gains rate. Your qualified dividends can also be taxed as long-term capital gains. You can check out this video about the dividend investing strategy linked in the description below. But just to give you a quick example, let's say you have $50,000 invested in a dividend stock that pays a 4% annual dividend yield. The $2,000 you receive in dividends will be taxed at 0% as long as it's a qualified dividend. The same capital gains tax rates apply to assets like cryptocurrencies, NFTs, jewelry, coin collections, and real estate as long as you hold it for more than a year. However, the exception is if you sell your owner-occupied real estate. And if you bought a home for $200,000 and sold it for $500,000 after living in it for more than 2 years of the 5 past years, then you get to keep the $250,000 in profit and pay $50,000 in capital gains tax if you're single. If you're married and filing your taxes jointly, then your real estate exemption is up to $500,000. Then you get to keep the $300,000 profit tax-free. And if you need help with your personal finances, like budget, saving, and investments to achieve your financial independence, you can schedule a free one-on-one 20-minute financial coaching session by visiting firestarchat.com/coaching. Now let's talk about how I pay my capital gains taxes before I reach my early retirement. Due to the amount of my active income, I actually do pay 15% in capital gains taxes whenever I gain profit from a sale of my assets like stocks. I rarely sell my investments unless I have fundamental changes in an individual stock that leads to my decision to liquidate it. What I really like is that the IRS allows me to do what's called tax loss harvesting, which I'll make another video about it in the future. And tax loss harvesting is a strategy US investors use by selling an investment at a loss or taking a capital loss and offset taxes owed on an investment sold at a profit or a capital gain. So let's say I bought one stock over a year ago for $10,000 and I sold it for $7,000. Then that's a $3,000 capital loss, right? if I sold another stock I bought for $5,000 and made $1,000 in capital gain, then I can offset capital gains with excessive losses. The remaining $2,000 in losses can be used to offset my personal income for that year, or carry the loss over to offset gains in future years. Since December 31st is the last day I can harvest my losses for that tax year, I usually wait until the end of the year to carefully strategize tax loss harvesting. I also need to be mindful of the wash sale rule, which means that I need to wait 30 days before or after the transaction of a capital loss to buy the same or similar stocks I sold at a loss to keep the capital loss deduction. And here's a realistic scenario, and I'm going to show you. When I could pay virtually $0 in taxes. And let's say my wife and I make $50,000 in active income and $50,000 in dividend income, with $27,700 in the standard deduction for a married couple in 2023. Our taxable income would be reduced to $72,300, and that puts us under the 0% capital gains tax rate under $89,250. A lot of people forget about the standard deduction and how it works to their advantage ever since President Trump signed the Tax Cuts and Jobs Act in 2017. Now, even if your income is high or too high to make the threshold, you still only pay 15% in capital gains tax when you sell your assets with realized gains. The key here is to hold your assets for at least a year or more. And if you make $100,000 a year as a single person and you sell an asset that you held for less than a year, then the short-term capital gains tax rate could be as high as 22%. And it's important to calculate your investments and how much you're looking to have over the years. And this is why I want you to get my financial independence resources for free by visiting firesightchat.com/contact. And here's how I plan to pay almost nothing in taxes when I retire early. My early retirement is between the ages of 45 and 60. During that time, I'm not gonna have any W-2 income because I'll be retired, right? The only active income I'll have is my business and real estate. I'm gonna have at least $1 million in my dividend stock portfolio that pays about $40,000 a year in dividend income. I'm gonna have at least another million or $2 million in my growth stock portfolio that pays another $60,000 a year. Without my business or real estate income, that's 0% in capital gains taxes with a standard deduction, so that I would pay virtually $0 in taxes. And during my early retirement, I'm gonna convert between $40,000 and $50,000 from traditional IRA to Roth IRA because my taxes are already low with unemployment. With the 5-year rule, I'm gonna be eligible to withdraw $40,000 to $50,000 a year tax-free and penalty-free between ages 50 and 65, and I have a video about my Roth IRA conversion strategy linked in the description below. So between ages 45 and 50, I should have $100,000 a year just in dividend income and other capital gains. Anything more than that is extra. And at age 50, I should have $150,000 a year in tax-free income with the Roth IRA conversions. And if I have my business and rental income making $100,000 a year, that's $200,000 or $250,000 a year in income, and only pay taxes on the business and real estate. And what's really nice about owning a business and real estate properties is that I get to write off my expenses, which lowers my taxable income even further. Now look at what happens after I turn 60. And I get to withdraw from my TSP 401k earnings in my Roth IRA and collect my military pension and federal employee pension. The projection I'm running right now is $300,000 or more in retirement income every year. My dream is living in several countries throughout the year based on the weather season. And I want to live in countries like Croatia, Switzerland, Norway, Portugal, Japan, and Finland, because life is way too short for me to just retire in one place. So while I'm still young in my 30s, I'm going to save and invest as much as I can, but at the same time, I'm going to have some fun by traveling around the world. So when I retire early, I'm going to have endless fun to enjoy the time I have left in this universe. So let me ask you this. Would you sacrifice 6 months, 1 year, or 2 years of your life to get your finances in order, like paying off your debt, so you can enjoy the rest of your life without ever worrying about losing a 9-to-5 job. And if you want to know more about how to start investing in your financial independence, be sure to check out these 2 videos. So with that said, I appreciate you watching my video. Don't forget to subscribe, and I hope to see you in the next video. Have a good one.